do we make of the recent action in maybe the most popular stock in this market, Amazon? Ever since the high-flying tech stock peaked above 2,000 in mid-July, this thing has run into some serious turbulence, as those who own it know. Amazon got clobbered along with the rest of the market in late July and early August, but after trading sideways for a few weeks, well, it's finally getting some lift, like some of the other retailers, but not as strong. We have to ask if it's a real bottom. Has Amazon gotten its mojo back? Tonight, we're going off the charts, special Friday edition, with the help of Carolyn Borodin. She's that brilliant technician who runs the FibonacciQueen.com website, also happens to be one of my colleagues at realmoney.com, to try to answer that question. Oh, and of course, happy birthday, Fib Queen. The last time we checked in with Borodin on July 29th, Amazon was trading at 1,912, and she told us to be ready for a resumption of the stock's long-term rally somewhere above its June 3rd low at 1,692. While she was hoping Amazon's floor of support would hold in the low 1800s, her thesis was that we were experiencing a temporary decline and a bottom would soon be at hand. Well, it took a little longer than expected. The stock didn't really turn until late August. But after its recent run, it's looking more and more like Borodin was dead right, so we went back to her. When you get a stock like Amazon right, we go right back to the well. Take a look at the daily chart of the action in Amazon over the past 9 months. Borodin uses a very particular method to detect potential changes in a stock's trajectory. She measures past swings and then runs them through the prism of Fibonacci numbers. That's a series of ratios discovered by Leonardo Fibonacci that repeat over and over and over again in nature. Seashells, pine cones, and for some bizarre reason, the stock market. The great thing about her MO is that it applies to both the y-axis of the chart, which is price, and the x-axis of the chart, time. Price, time. Price, time. Meanwhile, she has a tool that can help her identify important levels or important dates where a stock is most likely to change direction. When the market's pulling back hard, like it was when we spoke with her in late July, these Fibonacci time and price relationships can help you find safer entry points as you try to pick at the stocks into weakness, as you know we like, because we like Amazon and Mad Money. What does this have to do with the stock of Amazon? All right, when the stock was getting shelled again last month, you had a pretty classic setup. The last time Amazon got put through the meat grinder, in May, the stock plummeted, you're not going to believe this, 292 points, okay? 292. Keep that number in mind. And then it started rebounding. So if you were using Borodin's method, you would have known something important was happening when the stock bottomed again early last week. Why? Because on August 26th, when Amazon made its recent low, it had already come down 292 points. 292, 292. Is that incredible? That's the same size as the last big decline. You can't make this stuff up. This is a concept called symmetry. Stocks moves tend to terminate at similar levels. In other words, if the last big decline lasted for 292 points, there's a good chance that the next one will last for 292 points. It sounds ridiculous to many of you, like the kind of analysis a fifth grader or a second grader might do. But the thing about symmetry is that it very often works. You can't make this stuff up. Yes, sometimes the market really is that unrigorous. That symmetry had Borodin watching the mid-1700s as a likely level where Amazon might find a bottom. And that's not all. You had some other Fibonacci price relationships forming a powerful floor of support in the 1730s and the 1740s. Take a look at that. Sure enough, the August 26th low was made at 1743. But like I told you before, Borodin's methodology also looks at time. She's always measuring the duration of past swings in a given stock, then running them through her Fibonacci ratios to find crucial dates when you're likely to get a reversal. With Amazon's recent low, there were 5 separate Fibonacci timing cycles coming due between August 26th and August 28th. Okay, so you can see these. That's this axis. So she had the price parameters predicting a low somewhere in the mid-1700s, and then the stock fell to those levels right when Borodin's time parameter said it was due for a bottom. When the floor of support held, Amazon quickly started its rising thing. And its 5-day exponential moving average crossed above its 13-day exponential moving average, which is Borodin's favorite buy signal, and many technicians know that. And sometimes it's something we told you to watch out for the last time we highlighted her work in late July. Since the bottom, Amazon's already rallied a quick 90 points in less than 2 weeks, up 5%. So what do you do with it now? Borodin says the stock is back in uptrend mode. That's why she thinks you should buy any dips, we have one today, in Amazon as long as it holds above the 1743 level. That's your classic level. If it drops below that level, okay, that might call the uptrend into question. But if the recent bottom holds, How high could this stock go? All right, based on 127.2% Fibonacci extension of the last big swing, Broden could easily see Amazon climbing to $2,115. And that's just her first upside target. If the stock can cross that hurdle, it might be able to run all the way to $2,216. Holy cow. Would that be a huge move? And it's possible. My view, you know I'm a big believer in Amazon. They're the single most dominant player in retail. Their web services business is the single most dominant player in the cloud infrastructure space. And they've also got a rapidly growing advertising business. I like it here. Although I like it, of course, even more on the pullback that she'd like you to get it on. But the bottom line, the charts as interpreted by Carolyn Burrow suggest that Amazon has finally resumed its long-term rally, and she thinks it might be headed to 2,115, which would be a pretty nice run. I think you ignore the Fibonacci queen at your own peril. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.